Now let's go through all the amendments which have happened for May 24 examination. The first topic is related to supply. Now, supply, there have been amendments regarding online money gaming, which we will discuss at the end. And let's discuss two circulars which have been added in the syllabus. Before reading the circular, let me just give you an overview. Holding company is holding shares in the subsidiary company. Is there a supply of service by merely holding company holding shares of the subsidiary company? It's obvious that the moment we call them as holding and subsidiary, the holding company has shares of the subsidiary company. Whether that would be regarded as a supply, CBIC clarified that it would not be regarded as a supply because it is merely transaction in securities, and as it is merely transaction of securities, it is neither goods nor services. As you recall, goods and services both exclude securities. That is the first circular. The second one is with regard to movie ticket. In a cinema hall, you purchase movie ticket and you also book some snacks, popcorn, etc. Now the question is, when you book the movie ticket along with the snacks and it is being given together, then in that case, what would be the rate of GST? What would be the type of supply? CBIC has clarified that movie ticket booked along with food and beverages would be regarded as a composite supply where principal supply is movie ticket. But what if we purchase the food and beverages separately during interval? Then in that case, it would be a separate supply, restaurant service. These are the two circulars issued with regard to supply. Let's have a look from the note. Clarification regarding taxability of shares held in a subsidiary company by a holding company. Securities are neither goods nor services. Further, securities include shares as per Securities Contract Act 1956. This implies that securities held by holding company in a subsidiary company are neither goods nor services. Therefore, purchase or sale of securities is neither supply of goods nor supply of service. SAC, you understand SAC, Service Accounting Codes. SAC, in the scheme of classification of services, mentioning that services provided by holding companies, that is holding of securities of companies and enterprise for the purpose of owning a controlling interest, does not construe that merely by holding shares of subsidiary company these services are provided by holding to subsidiary company. Though there is an entry which is called as holding of shares, but just because there is an entry does not mean it becomes a supply. Say suppose government prescribes a rate of something which is not a supply. Does that mean that that will also become a supply? The answer is no. This circular has thrown immense light on this particular point. Unless there is a supply of service by holding to subsidiary company as per section 7. Until and unless there is a supply in terms of section 7, where there is a supply for consideration in the course of furtherance of business, or it's a schedule 1 transaction, or it's a case where business is missing import of service for consideration, then it can be regarded as a supply. Merely holding share is not a supply. Therefore, the activity of holding shares of subsidiary company by holding company per se cannot be treated as a supply of service. Only merely holding it is not a supply of service by holding to subsidiary and cannot be taxed under GST. Very welcome circular for the industry. Okay, then let's see Clarification on taxability of supply of food or beverages in cinema hall. Now let's understand what's the meaning of restaurant. See, restaurant service is defined in a notification. Now that's a rate notification. That is not there in your syllabus, but we'll just go through the definition of restaurant to understand the nature of the transaction. Whether it's a restaurant, then when it is booked with movie ticket, what would be the nature of the supply? Restaurant service means supply by way of or as part of any service of goods being food or any other article for human consumption or any drink provided by a restaurant, eating joint including mess, canteen, whether for consumption on or away from the premise where such food or article for human consumption is being supplied. That's what happens in a cinema hall, where the food is being supplied as part of a service. When food is being provided as part of a service, it is more of serving food rather than selling food. The cinema operators may run these refreshments or eating stalls or kiosk or counters or restaurant themselves, or they may give it on contract to third party. It is clarified that supply of food or beverages in a cinema hall shall be taxable as restaurant service, as long as food and beverages are supplied as part of a service and supplied independent of cinema exhibition service. If it is being supplied separately, like in interval, you go and buy something, that is a supply of service, that to restaurant service. But sir, what if it is clubbed with the movie ticket? That's the next one. It is further clarified that where the sale of cinema ticket and supply of food and beverages are clubbed together. Clubbed together. What is clubbed together? Sale of cinema ticket and food and beverages. And such bundled supply satisfies the test of composite supply. That means it was being supplied along with the main supply. The entire supply will attract GST rate of exhibition of cinema, that is the principal supply. So principal supply would be cinema ticket. Yes? Okay. Other changes related to online gaming and online money gaming is discussed at the end of this video. First, let's complete all other discussions. Okay. Time of supply, there has been one change for your syllabus, but that is related to online money gaming, which we will discuss at the end. Now coming to place of supply, a very interesting change has happened in place of supply. See, let me give you some background. 10(1)(a) says whenever the supply involves movement, the place of supply will be where the movement terminates for delivery to the recipient. Wherever the movement terminates for delivery to the recipient, that would be the place of supply. Then there is 10(1)(c). 10(1)(c) says supply does not involve movement. If it does not involve movement, then it would be location of the goods at the time of delivery. Wherever the goods were located, that would be the place of supply. Location of the goods at the time of delivery. So two things. 10(1)(a), if supply involves movement, where the movement terminates. 10(1)(c), if it does not involve movement, location of the goods at the time of delivery. Now, there was one issue. Say suppose I am an unregistered person. See, normally a registered person will always give his GST number and we will get to know where is the movement going to terminate, because movement can be made by the supplier, recipient or any other person, maybe the transporter. Anyone can do movement. Now the question is, when registered person gives his GST number, the supplier will get to know that yeah, the movement will terminate at the place where the registered person is located. But what if the supplier is supplying to an unregistered person? I'll give you an example. I am from Karnataka. I go to Mumbai and buy a webcam. I am from Karnataka. I go to a store in Mumbai and buy a webcam. I am unregistered. Now the question which arises is, in this case, what is the place of supply? See, supplier is in Mumbai. I am from Karnataka. I go to the store and buy it. I am unregistered. Sir, the sale is happening in Mumbai only, sir. It should be a C plus S transaction. Now, the state of consumption, that is Karnataka and other consumption states, have a problem with this. They said, see, ultimately that webcam is going to come to Karnataka. So Karnataka should get the tax. This is wrong. Why is C plus S being charged in Mumbai? Now to cater to this situation, government said, supply to unregistered person, there will be two cases. One, if the recipient gives address, he declares his address, then the place of supply will be such address. Whatever is the address given by him, that will become the place of supply. So in our example, supplier was in Mumbai. Say suppose I give my Karnataka address, then place of supply will be address given, that is Karnataka. Now supplier is in Mumbai, place of supply Karnataka, IGST, and half of this will come to Karnataka government. You understood? Okay. Now second case is where recipient does not give address. Now if the recipient has not given address, then in that case, does the supplier have any choice? No sir, recipient has not given address, what should I do? Then the law has said place of supply will be location of supplier. Now you think, when the place of supply is location of supplier, in this case, supplier is in Mumbai, recipient is in Karnataka, but he does not know that he is in Karnataka. So who does not know? Supplier does not know because address was not given. Then in that case, place of supply will be location of the supplier, that is Mumbai. Now in this case, supplier is in Mumbai, place of supply is in Mumbai. So what will you end up charging? C plus S. Will Karnataka get a share out of this? The answer is no. Clear with this? Very important for your exam. I think institute will surely test you on this particular aspect, because one, it is very much relevant in the industry. Second, it is an amendment. In fact, all amendments are important, but this one amendment is something where institute can test you easily. So be very careful with regard to this. To conclude, the provision is very simple. I have given you a case so that you are able to answer in the examination. Provision just says, notwithstanding 10(1)(a), 10(1)(c. That means this provision, that is 10(1)(c)(a), overrides 10(1)(a) and 10(1)(c). Oh, we don't have to listen to A, B, where terminates, nothing has to be seen. You can't go by terminates in that state. The delivery was completed in Mumbai only. No, you can't go by that. You can't go by location of the goods. Whenever supply is to a unregistered person, then you have to check two things. Address given, no address given. If address is given, such address. If no address is given, then location of the supplier. Clear with this? Yes? Okay. Now, let's have a look at the provision. Section 10 of IGST Act. What does 10 deal with? Supply, place of supply for goods, domestic transaction, that is other than import and export. Place of supply for supply of goods supplied to unregistered person. Supply to unregistered person. Where the supply of goods is made to a person other than registered person. So basically only targeting unregistered persons. The place of supply shall, notwithstanding anything contrary contained in A or C. We have to ignore A and C if there is anything contrary, because CA is a stronger provision. B. Location as per the address of the said person recorded on the invoice issued in respect of the said supply. So if the address is mentioned, then such address, or the location of the supplier where address of said person is not recorded in the invoice. If address is not recorded, then it would be location of the supplier. Explanation. For the purpose of this clause, recording the name of the state of the said person shall be deemed to be recording the address of said person. Oh, if you mention state sufficient, sir? Yes. State name will deem to be the address of the recipient, because what is important is which state should get the revenue. That's the whole objective, people. See, if we bury the tax in Mumbai, that is place of supply, location of supplier, then Mumbai, Maharashtra does not have a problem, but Karnataka has a problem. The Karnataka person took it. So that's why government has given these two things. Clear? Okay. Now there is a critical circular, a very good circular issued with respect to advertisements on hoardings. Now you understand hoardings. Let's take an example. JKSC Mumbai wants to promote CA course in Goa. Now this is a land in Goa. Obviously supplier, that is the owner of this land, is also in Goa. Now there is a hoarding. You understand hoarding. This is the hoarding. On this, JK Shah Classes wants to put its advertisement. If JK Shah Classes is taking this on rent, taking land and hoarding on rent, and they will manage the entire hoarding. They will manage the hoarding. So the company which is taking the property on rent and managing the holding, the question was what would be the place of supply? Would it be Goa or would it be Mumbai? Because let me give you some background. For any service related to immovable property, the place of supply will be where the property is located or intended to be located. And there is a general clause. And that general clause says the place of supply will be, if it is provided to registered person, then location of registered person. If it is provided to unregistered person, then it would be location of recipient. If that is not available, then location of supplier. That is what is mentioned in the law. If recipient, location not available. Okay, now the question is, this service which I have told you, maybe JK Shah Classes or some advertising company is taking the land or the hoarding on rent and managing the hoarding. What should be the place of supply? Sir, in our view, it should be Goa. Because it's a immobile property related service, you are taking the property on rent, the place of supply should be Goa. Now, if the place of supply is Goa, supplier is in Goa, what will he charge? He will charge C plus S of Goa. Now C plus S of Goa, will it be eligible as ITC to JKSC Mumbai? The answer is no, because C plus S of that state gets buried in that particular state. You will never get ITC of that C plus S. So it becomes a cost, sir? Yes, it becomes a cost. Now what can be done? Now there is a second alternative as well. Hire a person who will be going and taking the property on rent, and he will also maintain the hoarding, but he should be Goa registered. Then you take advertisement service. You only take advertisement service. Who is taking advertisement service? JKSC Mumbai. So there is a person who is managing the entire hoarding and providing advertisement service to JKSC. In this case, the person who has taken the hoarding on rent, he is going to manage everything. He is only doing, or whatever content JK Shah classes gives, they have pasted it there. They are managing everything. JKSC was only taking advertisement service. In this case, what will be the place of supply? Government has said, if it is advertisement service, then it is not immovable property related. It will fall under general category. And if it falls under general category, registered person, the place of supply will be location of registered person, that is Mumbai. Where is the supplier? Supplier is in Goa. Place of supply Mumbai. What will you charge? IGST. Will JKSC get ITC of this IGST? The answer is yes. JKSC will be eligible for ITC of this IGST. So, what will you recommend JK Shah classes? To take the hoarding on rent of a state where they don't have a place of business, or to take advertisement service? Sir, obviously advertisement service, so that at least IGST is charged and JKSC is able to take ITC. Now, I don't think they will try to test you on this part. I mean the type of tax and whether they will get ITC or not. They might check you with one small case where I am from Karnataka. Property is in Mumbai. I go to meet a client in Mumbai. I take a hotel there on rent. Now hotel, immobile property, hotel will charge me C plus S of Maharashtra. Will I get ITC in Karnataka? The answer is no. That might be included in one computation question. That is possible. Otherwise, not related to hoarding. But you never know. If the paper is slightly difficult, they might try to test you on place of supply as well as type of tax, as well as whether ITC will be available on that. It's a mixture of three things, people. Though the circular is only talking about place of supply, we have understood about the type of tax as well as the ITC availment or not available. We have checked that as well. Let's have a look at the circular. And all these are, if you wish to write now, you can go ahead and pause the video and write these in your notebook. Okay, let's see. Place of supply in case of supply of services in respect of advertising sector. Let's see. Place of supply where there is a supply, that is sale of space, or supply of right to use the space on the hoarding. So you are taking the hoarding on rent belonging to a vendor, to the client / advertisement company. So either the vendor is giving to some client or to a advertising company for display of their hoarding on the said hoarding. So the question was, what will be the place of supply? Clarification. Hoarding or structure erected on land should be considered as immovable structure or fixed as it has been embedded to earth. Further, place of supply of any service provided by way of sale of space on an immovable property or grant of right to use of an immovable property shall be governed under 12.3. 12.3 deals with place of supply for immovable property. As per 12.3, the place of supply of services directly in relation to immovable property, including services of architect, interior decorator, surveyor, engineer, other related experts, estate agents. Any service provided by way of grant of right to use of immovable property or carrying out coordination of construction work shall be location where the immovable property is located. Hence, the place of supply shall be location where such hoarding / structure is located. Okay. Then place of supply, where vendor himself owns the structure. Vendor himself owns the structure or takes it on rent. Now we are talking about advertisement company. They hold the structure or they are taking on rent or right to use from another person and is responsible for display of advertisement. Oh, that means JK Shah classes only wants our advertisement to be displayed. We don't want to take on rent. We don't want to manage that entire thing. And is responsible to display the advertisement of the advertising company at the said location. During this entire time of display of advertisement, vendor is in possession of the hoarding at the said location on which advertisement is displayed, and the advertising company is not occupying the space or structure. Here advertising company, they are basically referring to JK Shah classes, where the company which is getting its goods or service advertised. The said service does not amount to sale of advertisement space or sale of giving on right to use immobile property. Accordingly, place of supply will not be covered under 12.3. It's not sale of space. Then what is it, sir? Advertisement service. The vendor is in fact providing advertisement service by providing visibility to the advertising company advertisement for a specific period of time on his structure possessed or taken on rent by him. Therefore, such services provided by vendor to advertising company are purely in the nature of advertisement service, and place of supply will be determined as per 12.2. And what does 12.2 say? If it is provided to registered person, then the place of supply will be location of registered person. It is provided to unregistered person, then place of supply will be location of recipient. If that is also not available, then location of supplier. Okay, important discussion. Okay, now let's talk about changes in valuation, composition, exemption, RCM and eco. So first one is related to Indian Railways, very important. Now Indian Railways now is completely covered under forward charge. Please understand, government, any service by government used to enjoy an exemption, correct? Any service by government exempt, but there were four services which were taxable. We used to call them as four limbs, four parts, four limbs. First part was Department of Post. This was taxable, right, sir? Yeah. Second part was transportation of goods or passengers. Third part was service in relation to vessel or aircraft, whether inside the port or outside the port or airport. And the last one was any service other than 1 to 3 to business entity. Now if you recall, first three limbs was covered under forward charge and the last one was taxable under RCM, correct? Now sir, Indian Railways already covered by this, no, transportation of goods and passengers. Now see this, Indian Railways does not just provide transportation of goods or passenger, is it, sir? Yeah, they give stalls on rent in railway station. They also give various places for rent to telecom companies to set up their devices, etc., so that Wi-Fi is available. So they get a lot of rental revenue. Now all this rental revenue, the question was where will it be taxable, whether taxable under RCM, because the moment something is taxable under RCM, you are not discharging output tax, you will not get ITC relatable to that particular outward supply. So if your output is RCM, where other person is paying the tax, you will not get ITC on purchases related to this supply. So railways was completely confused and in chaos, because some ITC you will not get, some ITC you will get, proportionate calculation to be done, and that's why they would have requested, because anyways government department, they would have requested Ministry of Finance saying that please include us in forward charge, we will pay tax everywhere and we will get full ITC. We don't want this headache. What government did is, in this Department of Post Entry, they added Indian Railways. Now, the moment you add Indian Railways here, what is the impact? Indian Railways is taxable under forward charge. So, any services by Indian Railways is now taxable under forward charge. No RCM, sir? No RCM. In fact, even if Indian Railways gives it to business entity, it will again be taxable under forward charge, because fourth limb excludes 1, 2, 3. So what they have done is, wherever Department of Post was mentioned, they added Indian Railways. In fact, they removed Indian Railways from RCM entry also. So the net impact is, Indian Railways providing any service will now be covered under forward charge. So they might give you such question in the examination, where Indian Railways is giving a premise on rent to someone who is providing telecom service. So Indian Railways will charge GST to this person will get ITC. So I am not required to pay under RCM as a business entity, because any service by Indian Railways will now be treated on par with Department of Post. Let's have a look. Important, huh? In entire exemption and RCM chapter, Indian Railways has been added after Department of Post. Any service by Department of Post is covered under forward charge. To give the same effect to services provided by Indian Railways, exemption entries and RCM entries have been amended to include Indian Railways under the exception to exemption and RCM. So no exemption, no RCM, always taxable under forward charge. Okay. It means that all the services provided by Indian Railways is now taxable under forward charge, so that Indian Railways can avail ITC without any ITC reversal. No need to worry, this is exempt, this is taxable, this is RCM, everything will now be covered under forward charge. Okay. Sir, but what about Indian Railways non-AC? Non-AC, see, there is a separate exemption for transportation of passengers. That non-AC exemption will continue as it is. Sir, for that they'll have to reverse ITC. That cannot be helped, because non-AC railway passenger service even today enjoys an exemption, which is a separate passenger entry. Okay. Then coming to these boards, which are government authority set up for water supply or sanitation facility or slum improvement. There are various board setup. See, all these were functions entrusted to the local authority, municipality. But with time, government realized that it is better to have a separate board for water supply function, sanitation function. So what they did is, local authority was already functioning. They made a new board, or they introduced a new act to bring a new person called as government authorities. Now what is government authority? Now government authority is a authority or board set up by an act of parliament or state legislature, or established by government, where 90% of equity control is with government, and it is to carry out a function entrusted to the municipality under 243W, or function entrusted to a panchayat under 243G of the constitution. So These are set up for carrying out functions which are constitutional functions. Now, water supply. In Karnataka, Bangalore, there is an authority called as BWSSB, which is responsible for sanitation and water supply. In Delhi, we have Delhi Jal Board. So the question is, this Jal Board or BWSSB, when they provide water supply, there is no GST on that. Now, if there is no GST on output, all their purchases become liable to GST because there was no exemption. Now, if there is no exemption on the purchase side, it becomes a cost to the government authority. If it becomes a cost to the government authority, it increases the price of the final product or service which is going to be given to the consumers. And that's the reason government authorities requested that this is not something which can be the intention of the law. There has to be a change. Let me tell you, two government already had an exemption relating to pure service or composite supply where goods element does not exceed 25%, and it's a function interested by panchayat or municipality. So two government and two local authority already exemption was there, and plain exemption, doesn't matter what kind of function, two government exemptions were there. Governmental authority exemption was missing, so government authority has been now added in the exemption list, and now BWSSB or Delhi Jal Board receiving service in relation to water supply, in relation to sanitation, will enjoy an exemption. It should not be any board or authority set up by government. It is only those board or authorities which perform certain functions. Let's see what are those functions. Service provided to government authority by way of, see, it should be only for these 5 functions. Anything other than this, sir? No. Anything other than this? No. Exemption. It should be a function related to these 5 activities, a service related to these 5 activities which is being provided by private players to government by way of water supply, public health, sanitation conservancy, solid waste management, slum improvement and upgradation. Again, a very important entry. They can give you this question saying Mr. A was providing various services. One of the services was helping BWSSB or a municipality or a governmental authority in water supply. Will be exempt. This type of question you can expect from this. Okay. Composition scheme. One small change has happened, but very significant change. Supplier of goods through e-commerce operator where TCS is applicable is eligible to avail composition scheme. So earlier, goods or services through e-commerce operator where TCS is applicable, where TCS is applicable was not allowed to take composition scheme. He was not allowed to take composition scheme. Now this word goods has been deleted. That means, can a person supplying goods through eco take composition scheme? The answer is yes. Now a person supplying goods through e-commerce operator can take composition scheme. Why has government done this, sir? To give encouragement to ONDC, Open Network Digital Commerce. Open Network Digital Commerce. What is this, sir? Government is trying that all the small retail stores etc. are able to sell online without any difficulty. Now those small retail shops will be either unregistered persons or composition taxpayer. Unregistered person, government has given various benefits, we will see that also. Composition, government has allowed them as well, saying that you are doing composition, you can sell online, so that every small retail shop is also able to sell online. And government has started one initiative as well called as ONDC, Open Network Digital Commerce. You can get a question on this. Okay, coming to RCM and eco changes. RCM first is very clear. Indian Railways is excluded from RCM entry so that any service provided by Indian Railways is covered by forward charge. This we are aware. Second one is again a very critical one. Okay, let me give you a background. See, transportation of passengers in a radio taxi, motor cab, maxi cab, motorcycle, omnibus, basically bus, or any other motor vehicle. Now what I have just written is a 9(5) entry, 9 subsection 5, where the e-commerce operator will be responsible to pay the tax. Now in this case, e-commerce operator is liable to pay tax to government. Earlier this was also not there. Now from May 24 they have included 9(5) services also in your syllabus. So 9(5) basically has 4 services. 1. Transportation of passengers in a radio taxi, motor cab, maxi cab, motorcycle, omnibus, any other motor vehicle. Second, restaurant services other than restaurant in a specified premise. Restaurant services, Swiggy, Zomato. Third, housekeeping services except where the supplier of service is liable to register. And last one, accommodation related services except where the supplier of service is liable to register. So housekeeping and accommodation, if supplier is registered, then supplier will pay the tax. If supplier is unregistered and supplying through e-commerce operator, then eco is responsible to pay tax. So totally 4. 1. Ola, Uber or Red Bus, which is this entry. Second, Swiggy, Zomato, except in a specified premise. Specified premise means a premise where declared tariff of any unit of accommodation is 7,500 or more. Third one, housekeeping. Fourth, accommodation. In housekeeping and accommodation, if supplier is liable to register, then it becomes a case of 9 subsection 1, forward charge, normal. If supplier is not liable to register, then it is 9(5). Fair enough, sir. Now 9(5) covers this entry. Now what is the change? First let me explain you this. Say suppose there is a company. This company is supplying transportation of passengers through Red Bus. Now who will pay the tax? So Red Bus will pay the tax because Red Bus is the e-commerce operator. Company will not pay tax. So there is no 9(1). It will be a case of 9(5). Agreed? Now these companies were worried. These companies said no. If we are not allowed to pay output tax, then again our ITC will be in difficulty. Anyways, they asked government, don't you trust us? Because the whole point of bringing 9(5) was government did not trust the suppliers to pay the tax. So government said, e-commerce operator, you are easy to catch, you pay the tax. Now companies faced a difficulty because they are not discharging output, their ITC becomes difficult. And that's the reason these companies requested, please, if we are providing services of transportation of passengers in a omnibus, please allow us to provide services and charge under 9(1). What government did? Government deleted omnibus from this entry and added one more entry called as transportation of passengers in a omnibus other than provided by a company. Other than provided by company. That means if a company is providing, then in that case 9(1). If it is other than company, then it will continue to be under 9(5). In my view, they could have added this line here only. No. But what government did? Government deleted omnibus from one entry, and then they added one more entry for omnibus and excluded only a company. Be very careful. Only a company is excluded. And company means company under Companies Act 2013. It does not include LLP or partnership firm. Don't mix up things. Body corporate is there at various places in reverse charge mechanism. Body corporate covers company as well as LLP. Two things are covered. This one, be very careful. This one only excludes company. So to sum up, if company is providing bus service, then company will pay the tax under 9(1). If anyone else is providing bus service, then Red Bus or the e-commerce operator will be liable to pay tax under 9(5). Let's have a look. Section 9555 provides that notified services where ECO is responsible to pay tax as if he is the supplier. A company providing services of transportation of passengers by omnibus is excluded from 9(5). So if a company is providing transportation of passengers by omnibus, not by other modes, only omnibus, it means that the company will pay tax under forward charge and would not face any issue with regard to availment of ITC on their purchases, as they will be discharging output tax on their supply instead of e-commerce operator. Company would have the same meaning as provided in Companies Act 2013. Okay. Then there is one small circular, director services. See, you are aware that director providing services to body corporate, who is responsible to pay the tax? Body corporate. Now, what if director is a chartered accountant? He is a director and he is also providing some consultancy service separately. Some consultancy service is provided separately to this body corporate. Now, will this also be covered under RCM? See, director to body corporate is RCM. Will this be covered under RCM? CBIC said no. Because director to body corporate will be covered under RCM only if it is in the capacity of the director. If any service is provided in any other capacity, then in that case, it would not be a case of RCM. Let's have a look. Whether RCM is applicable in case services supplied by director of a company in his personal capacity. It has been clarified that services supplied by a director of a company or body corporate to the company or body corporate in his private or personal capacity, then such service, such as services supplied by a renting of immobile property, shall not be covered under RCM. Only those services which are supplied in the capacity of director are taxable under RCM. This is there in the circular. But let me bring one more thing to your notice. Renting of immovable property. Say suppose director has a property. Director has a property. Now director provides that property on rent. Director provides that property on rent to the company. They are saying forward charge, but it has to be a commercial property, because you remember there is one more entry in RCM, residential property given on rent to a registered person. Then who is responsible to pay the tax? Registered person. But sir, what if it's a commercial property? If it's a commercial property, then in that case it will be taxable under forward charge. Remember this differentiation. See, director to body corporate is anyways covered by RCM. Director giving residential property to registered person is again RCM, because there is a separate entry for this. Commercial property, there is no such entry. So if the director gives a commercial property on rent, then in that case it would be a simple case of forward charge. Clear? Okay. Okay. Input tax credit, section 17(5). There has been one small change, and that change is, say suppose we purchase some goods for corporate social responsibility, CSR activity, which is required under Companies Act. If a company is purchasing some goods or services for CSR activity, will the company be eligible for ITC? This was an industry dispute. Now it is included in block credit. Now tell me, if it is included in block credit, will the company get ITC for any goods or service which they purchase for CSR activity? The answer is no. Important point, they may include this in the question, saying that some goods were purchased to meet CSR obligation which is required as per Companies Act 2013. 5 lakh purchased, 18% GST. Will you get ITC? No. Clear? Okay. Then comes registration, payment, TDS, TCS. TDS, TCS is a new topic. So go through that first, and then you'll be able to manage the amendments or circulars which have been issued on this. Now, let's see registration. What has been the change? See, section 23, you recall. Section 23 deals with persons who are not liable to register. If a person is wholly supplying exempt goods or services, this was already there. This is not an amendment. This was already there. Agriculturist in relation to cultivation of land, this was also not an amendment. This was also there. What has changed? There was an issue with regard to which is stronger, 22 versus 23, 23 versus 24, and 24 versus 22. I'll start from the first one. 22 versus 23. 22 talks about persons liable to register, and 23 gives a relief saying that not liable to register. So 23 was considered to be stronger. 24 talks about compulsory registration. Now compulsory registration versus liable to register, 24 was stronger. The area of concern was, what about 23 versus 24? Because 23 says not liable to register and 24 says compulsory registration. So should I register or not register? Now, for that you need to understand some background. 23(1) and 23 subsection 2. 23(1) has two categories. First one is only exempt goods or service. If someone is only supplying exempt goods or services, not liable to register. Agriculturist, not liable to register. 23(2) gives the power to government to notify certain persons who will be exempted from taking registration. And in this, earlier there were 3 entries. First one, if you are only supplying something which is covered under RCM, think, you are a supplier, you are providing something which is covered under RCM, so for you output is 0. Then interstate handicraft goods, and the limit was 10 lakh, 20 lakh. Handicraft goods, that too notified handicraft goods, you don't have to remember what is notified, but if you are supplying interstate handicraft goods, still no need to register. Then there was an entry with regard to services through e-commerce operator up to 10 lakh, 20 lakh. This was already there. Now the problem was which is stronger, whether 23 is stronger or 24 is stronger. What government has done? Government has kept 23(1) silent. They have not done anything for 23(1). 23.2, they have said 23.2 is stronger, that is it will override 24 as well as 22.1. That means these 23.2 entries will override 24. Now the bigger question, see this is very clear that 23.2 will override 24. We always consider 23 always to be a stronger provision because of beneficial construction. You are trying to give the relief to the assessee. So 23 was always considered to be stronger. Now by amendment they have said 23.2 is stronger than 24 and 22.1. Now the problem in real life is 23 is stronger than 24, this is sorted. But what about 23.1? Is 23.1 weaker than 22.1 and 24? In my view, no. Because 23.1 talks about persons not liable to register, which is a very clear statement. While 23.2 used to give exemption from taking registration. So the language of both the provisions are different. In my understanding, 23.1 they have not included this line because 23.1 is anyways stronger than 22.1 and 24. So what should we do, sir? 23 will always be considered to be stronger than 24. Now I don't think institute will try to ask you 23.1 versus 24. Because this is even today a gray area, but they can surely ask 23.2 versus 24. Can you give us an example, sir? Now 24 says service or goods through e-commerce operator, compulsory registration. 24 says services or goods through e-commerce operator where TCS is applicable, compulsory registration. Now 23.2 is giving a relief up to 10 lakh 20 lakh, no need to register. Which is stronger? 23.2 is stronger, now given in the law clearly. Then 24 talks about interstate goods. If you are supplying goods interstate, then mandatory registration. But if it is interstate notified handicraft goods, then no need to register. So which is stronger? 23.2 is stronger. The only problem will come when we compare 24 with 23.1. That's the only problematic area. Otherwise, there is a lot of clarity in the law now. So, first amendment which has happened is 23.2 will override 24 and 22.1. This is one part of the story. Then they have added something here. What have they added, sir? They have added goods through eco up to registration limit. Goods through eco up to registration limit. And here they have mentioned registration limit in current year as well as preceding financial year should be up to registration limit. Individually, na sir, individually. You will check separately. But both current year as well as last year turnover should be below registration limit. Then you can supply goods through e-commerce operator. This is to encourage open network digital commerce so that every retail shop, even if he is unregistered. See, some time back we saw that composition taxpayer can sell outside the state. Correct? Sorry. Composition taxpayer can sell online. He cannot sell outside the state. Composition taxpayer can sell online. Now we are saying unregistered person also can sell goods online if his turnover is up to registration limit. Clear with this? Okay. As government is allowing this, government has kept lot of conditions. He should not supply in more than one state. So only one state he can supply. He can register only with the eco for one state. Then PAN, he should have a PAN. Then he should take a enrollment number on the common portal. Then he should not supply unless he has enrollment number. Then no interstate supply. And last one, once he crosses the registration limit, he will register and enrollment number will be cancelled. So this goods through econ, they have added lot of conditions. To sum up, two important changes. One, 23(2) will override 24 and 21. This is one change. Second change is goods through e-commerce operator is now permitted if their current year and preceding financial year turnover is up to registration limit, but they are subject to various conditions. Clear? Let's have a look. 23, you already know these two. These two are 23(1). Now the C point is 23 subsection 2, which gives a power to government to notify persons who will be exempted from taking registration. Now let's see what they have changed in 23(2). Notwithstanding anything contained in 22(1) and 24, government may, on the recommendation of council, by notification, subject to such conditions and restriction, specify category of persons who may be exempted from obtaining registration. Using the above provisions, central government has exempted the following persons through notifications. Let's see. Person making supply of goods through e-commerce operator. See, goods through e-commerce operator who is required to collect tax under section 52 and having aggregate turnover in preceding and current financial year not exceeding 10 lakh, 20 lakh, 40 lakh. The law says registration limit under 22(1), but 22(1) proviso also has 40. So 40 lakh can be considered here. Subject to the following additional conditions. Let's see what additional conditions. Such person shall not make any interstate supply of goods. No interstate allowed. Shall not make a supply through eco in more than one state. Shall be required to have PAN and will have to declare the same on the portal along with address of place of business in which he seeks to register, which will be validated by common portal. On successful validation, one enrollment number will be given. No supply can be made through eco unless enrollment number is there. Where such person subsequently is granted registration under 25, enrollment number will cease to be valid from the effective date of registration. What type of question can come? Case study or plain theory? In both the circumstances, you need to perfectly remember this, because you will have to write this in a case study or a theory question if asked. Clear? Okay. Now this procedure for registration, I'll just focus on the areas which have added from last time. I've kept the entire points, but see, Gujarat biometric based Aadhaar authentication and risk based physical verification was added last time itself. That's there in November 23 video as well. Now with Gujarat, now Puducherry also has been included in this. So Puducherry covered. Biometric analysis is basically where a person will be required to go to a facilitation center who has applied for registration. He has to go to a facilitation center, show the document, and then complete the Aadhaar authentication there in front of the officer or any other person sitting in the facilitation center. Then what is the amendment in this, sir? In this, Puducherry is added. That's one area. This is amended portion. You'll write amendment. This portion. Bank details. Bank details. Earlier, the time limit was 45 days from grant of registration or due date for GST return, whichever is earlier. Now they have changed it. Both they have changed. 30 days from grant of registration or date of furnishing details of outward supply under section 37 GSTR 1/IFF. And careful, date, not due date. Date of furnishing outward supply details under section 37, whichever is earlier. Very important for exam, rule 10A, because they have added this rule 10A that if this rule 10A is not followed, registration will be suspended. And once you furnish the bank details, you will get back the registration. Deemed revocation of suspension will happen. Plus they have also added this rule 10A. If we don't follow this, we will not be able to file GSTR1. So they have added this rule 10A at number of places. Physical verification. As you are already aware, physical verification, officer visiting the premise, can be done before grant of registration or after grant of registration. Now if it is done after grant of registration, then officer has to submit the report within 15 working days from the date of such verification. So if he has done verification today, within 15 working days he should submit it. Sometimes it is done before grant, obviously, where you have not authenticated Aadhaar, or based on data analysis or risk parameters identified by common portal, or where PO deems it as a fit case. In all these cases, it will be done before grant of registration. If it is done before grant of registration, then all the physical verification report officer has to upload at least 5 days prior to the completion of time period of 30 days from the date of submission of application. And requirement of presence of the registered person at the time of physical verification is removed. Earlier it was required that registered person is there in the premise when physical verification is done. Now that is being removed. Should I keep waiting for the officer every time? Earlier that was required, now it has been removed. Okay. Suspension, again important for case study. If there is a contravention of provisions of rule 10A, bank details not given on time, then will be suspended or not cancelled, suspended. Further, where registration has been suspended in contravention to rule 10A and registration has not already been cancelled, so cancellation has not happened till now, the suspension will be deemed to be revoked upon compliance of rule 10A. The moment he gives the bank details, suspension is revoked. Okay. Then you remember section 30, revocation. Which revocation? This is revocation of cancellation. Earlier the time limit was different, 30 plus 30 plus 30. There were 3 limits. Now they have changed it. Now the time limit for revocation is 90 days plus extension not exceeding 180 days by commissioner or a officer not below additional commissioner, joint commissioner. So now you get 90 days plus 180 days for revocation. Careful about this important provision. Okay. Rule 88D. Now brother of this, rule 88C was there in last amendment video, plus it was asked in examination as well. Rule 88D is 2B and 3B mismatch. So say suppose 2B the ITC is 80 rupees, but in 3B I have gone ahead and claimed 100 rupees as ITC. 2B 80 rupees, 3B 100 rupees. They will send a notice in form DRC 1C. Now I have to do 2 things. Either pay 20 with interest if I have used it, or reply stating the reason. Now if I pay, no problem. If I reply with reason, 2 cases. Officer is satisfied with my reply, no problem. If he is not satisfied, then he will start show cause notice under 73, 74 and proceedings will start against me. Plus if I don't follow rule 88D, that is I don't reply only. If I don't reply, neither I have paid. If I don't reply or neither I have paid, then I will be not allowed to file GSTR1/IFF if I don't reply or don't pay. Now this can be asked as a theory question or a case study question. So basically difference between 2B and 3B. 2B is what is coming as a auto generated statement of my purchases. 3B is where I avail ITC. Careful, 2B is the ITC based on whatever my suppliers have furnished. 3B is the ITC which I have claimed. So if there is a difference between 2B and 3B, that is I have claimed more ITC in 3B, then I will get this notice. Clear? Let's see the provision. Manner of dealing with difference in ITC available in auto generated statement, that is GSTR2B, or ITC availed in the return. Return is GSTR3B. If the amount of ITC availed by the registered person in 3B you have claimed more, exceeds ITC available in accordance with 2B by such amount or such percentage as may be prescribed. Has it been prescribed till now, sir? No. By such amount or such percentage as may be prescribed, then the said registered person shall be intimated of such difference in Part A of Form GST DRC 1C on the common portal as well as on his email address. So no letter will come, only on common portal and email address. The intimation will direct to pay the excess ITC with interest through DRC 03. DRC, sir, what is DRC? Demand and recovery. You learn that entire chapter in final. DRC is whenever DRC, demand and recovery. Who recovers? Government. Demand, who raises? Government. Or explain the difference within 7 days. The registered person shall either pay the excess ITC or furnish a reply electronically giving reasons of difference. Where the amount is not paid or the reply is not found to be acceptable by proper officer, then the said amount shall be liable to be demanded with 73 or 74. 73 deals with notice for other than fraud cases, show cause notice, and 74 deals with show cause notice for fraud cases. Okay. Then let's see some special procedures for collection of tax at source. Now TCS. See, TCS, government has given guidance to e-commerce operators as to what should they do when a composition person is supplying goods through eco. You understand what this is? Government has given guidance with regard to what has to be done by a eco. If a person is supplying goods being a composition taxpayer, first thing, should not be allowed to make interstate supply, shall collect tax at source. So eco should not allow him to sell outside the state because composition person cannot supply outside the state. Second one, should TCS be collected? Yes, tax should be collected at source, and that will come in e-cash ledger of the composition taxpayer. He'll be able to adjust it and pay because 1% is the TCS rate. Composition also pays 1% on output. He can pay using e-cash ledger, and it shall furnish the details of supplies made through it in GSTR 8. GSTR 8 TCS statement. Who furnishes? Eco. So he should furnish these details that this many composition people have supplied through me. Okay. Now, can a unregistered person supply goods through e-commerce operator? Yes. Can an unregistered person supply goods through e-commerce operator? Yes. Now, when unregistered person is supplying goods through e-commerce operator, the question is whether TCS should be collected. The answer is no, because unregistered person na people. So, first government has said allow only when he has a enrollment number. You remember, we just discussed some time back. He should have a enrollment number. Second, he shall not be allowed to make interstate. That is obvious. It shall not collect tax at source. TCS will not apply, sir. No. For an unregistered person, TCS will not apply. And last one, all these details, where even if TCS is not made, it should be furnished in GSTR 8 by the ECO. So ECO is under various obligations. How will question come in exam? There will be a e-commerce operator in the question and he will ask your suggestion. You have to write all these suggestions. Okay, last one. Where multiple ECOs are involved in a single supply, more than one ECO, then e-commerce operator shall mean ECO who is finally releasing payment to the said person of the said supply made by said person through him. Meaning, sir, supplier side ECO. So if there are multiple e-commerce operator, that one e-commerce operator is selling to another e-commerce website, and that e-commerce operator is going to be the face for recipient. So there can be supplier side e-commerce operator, recipient side e-commerce operator. See, there is a supplier and ECO of supplier. So supplier side e-commerce operator is looking after this. There might be recipient and recipient side e-commerce operator. Now the question is, there are two ECOs. Who will make TCS? Government has clarified supplier side ECO, because he will be making payment to the supplier. So he will have to follow TCS provisions, not recipient side e-commerce operator. Understood? Okay. Okay. Then there is a circular relating to 53 computation. Now what is that 50 subsection 3, sir? People, see, if ITC is wrongly availed and utilized, ITC is wrongly availed and utilized. If ITC is wrongly availed and utilized, then in that case, interest will apply at 18% per annum. Now, is the word utilized defined? Yes. Utilized means when the balance in e-credit ledger, careful, when the balance in e-credit ledger falls below the wrongly availed ITC, falls below the wrongly availed ITC. The moment balance in e-credit ledger falls below the wrongly availed ITC, it is said to be utilized. Now the question is, this balance in e-credit ledger, should it be seen ICS together or ICS separately? Think. ICS together or ICS separately? Okay. CBIC has clarified that this has to be seen together and not separately. Why, sir? Because you understand, I don't have a discretion of how I will use C and S, because the law mandates that I have to use I before using C and S. You remember? So even if I don't want to use IGST balance because I am in doubt whether it is wrongly availed or correctly availed, still I don't have a choice. I have to use I first. I with C or S, any order, any proportion. First I has to be used. So I don't have a discretion, and that's the reason CBIC has said that this balance in e-credit ledger has to be seen together. They can give you a practical question on this. ICS, to be seen together. Correct? Okay. What about compensation cess, sir? Now compensation cess is to be seen separately because that cannot be adjusted against this. This cannot be adjusted against this. The compensation cess you will see separately. ICS you will see together. Let's have a look. Issue. For the purpose of calculating interest under Rule 88B, whether the balance in ITC available in e-credit ledger under the head IGST only needs to be considered, or total ITC in e-credit under the head ICS and compensation cess together has to be considered. Let's see clarification. Total input tax credit available in e-credit in the heads of ICS is taken together shall be considered. For calculating interest under Rule 88B, for determining whether balance has fallen below the wrongly availed ITC, for determining to what extent balance has fallen below the wrongly availed ITC. You will see together. But compensation cess cannot be utilized for CSI heads or reversal of credit under these heads. Accordingly, credit of compensation cess available in e-credit shall not be taken into account while considering the balance in e-credit ledger for the purpose of calculating interest. Okay. Then there is a clarification on TCS liability under section 52 of CGST Act, where there are multiple eco in one transaction. We have already discussed it. Let's read it. Supplier side eco has to discharge. Where multiple ecos are involved in a single transaction of goods or services or both through e-commerce operator, the compliance of 52 including TCS will be done as follows. Where supplier side eco is himself not the supplier. He should not be the supplier himself. Supplier side eco is not the supplier. He is only eco and there is another supplier. In such situation, the compliance under section 52 of CGST Act including collection of TCS is to be done by supplier side eco who releases payment to the supplier for a particular supply made by the supplier through him. In this case, buyer side eco is neither required to collect TCS nor other compliances. But sir, what if I am a supplier? I am supplier side eco. Oh, you are the supplier and you are only the eco, and I am contacting some buyer side eco, and then buyer side eco will be responsible. Let's see. Where supplier side eco himself is the supplier of the said supply. In such situations, TCS is collected by buyer side eco while making payment to the supplier. Clear? In fact, one third case can come. Supplier side eco. He is only the supplier and there is no other e-commerce operator. Then TCS will not apply because I am only the supplier, I am only the eco. Clear? This is for multiple e-commerce operators. So when there are multiple e-commerce operators, at least some e-commerce operator has to collect TCS. Again, a very important one for case study. Okay. Then coming to invoice, return, e-way bill, some small discussions. E-way bill, there has been one rule 138F which has been added in law, but in statutory update of ICI it is not there. So we have excluded it because it is not relevant for examination point of view. Okay, let's see the first one. Particulars to be mentioned on an invoice. See, name and address of recipient, it is required if value is 50,000 or more. This is already there. This is not the amendment. Amendment is this part. However, if the supply is through eco or by eco, OIDR you learn at final level, online information database access retrieval services. So this not relevant to you. Supply through eco, by eco, to unregistered person or supply of online money gaming, then the name of state should be mentioned and such name shall be deemed to be address on record. Name has to be mentioned and that name will deem to be the address on record. Which name? Whose name? State name, state name, so that that particular state gets the revenue correctly. Even if it is below 50,000, yes. So this was already there. What is amendment is this part. Careful about this. Then e-invoice limit is now reduced to 5 crore. So any person starting from 17-18, if his turnover is more than 5 crore, then he has to generate e-invoice. Okay. Then there is a circular relating to e-invoice, whether it is required in a particular case. Let me tell you the case. Mr. A is a registered person. Now government department. See, government department, if their output is exempted, they will not take regular registration. But government department will have to take a TDS registration. Why will they take TDS registration? To deduct TDS. If they have taken TDS registration, then they are considered as a registered person because they have TDS registration. Now the question is this supply, whether e-invoice required. Whether e-invoice required. CBIC has said yes, because even though they just have TDS registration, but they will be regarded as a registered person. As it is a registered person to registered person, B2B transaction, is e-invoice required? Yes. You draw and keep this. It is to government department. Now by government department, e-invoice is required. This is not by the government department. This is to government department. Careful about that. Is e-invoice required for supply by registered person to government department or establishment or government agency or local authority or PSU registered solely for the purpose of TDS under section 51? Let's see the answer. The government department or establishment or government agency or local authority or PSU registered solely for the purpose of deduction of tax at source as per section 51 are liable to compulsorily register, because TDS compulsory registration. Hence, they are treated as registered persons under the said act. Hence, e-invoice is required to be issued by registered persons who are required to issue e-invoice. Okay. Then there is one change which has affected lot of provision. It has affected GSTR 1. It has affected GSTR 3B, 4, 5, 5A and 6 you can ignore, because 5A deals with OIDAR, 6 deals with input service distributor. But 3B sir, 3B normal return, 4 composition, 5 NRTP, 7 TDS which is newly added, GSTR 9 and GSTR 8 TCS. So January month, due date for GSTR 1 will be 11th Feb, say suppose 2024. Correct. Now till when can you file this? I mean, you have not filed this return only for Jan. For Jan you have not filed any return. Till when can you file it? The government has fixed it for time 3 years. But sir, if I don't file for 6 months, registration will get cancelled. That is true, but still the provisions have provided that, say suppose cancellation is done, then revocation you apply, then fight the case, then case goes on, you reach High Court. Now after that, till when can you file GSTR 1? You can file it till 3 years from the due date All GSTR 1, 3B, 4, 5, 7, 9, 8. Let's see. What is missing, sir? Final return. In final return, this point has not been added. A registered person shall not be allowed to furnish details of outward supply or furnish a return for a tax period after 3 years from due date for furnishing such details. However, government may, on the recommendation of council, by notification, subject to such conditions and restrictions as may be specified therein, allow a registered person to furnish details of outward supply even after expiry of 3 years. So it is possible that even after 3 years government is giving a option to such registered person. Okay. Then one amendment in section 37. GSTR 1 or IFF cannot be filed if 3B for previous month or previous quarter has not been filed. Plus, if you don't file previous GSTR 1, anyways it is not allowed. Then it cannot be filed if rule 88C. 88C is notice for mismatch between 1 and 3B. Notice for mismatch between 1 and 3B. And rule 88D is notice for mismatch between 2B and 3B. And rule 10A is bank details not given on time. So if these are not followed, you will not be allowed to file GSTR 1 or IFF for next tax period. Okay. Now late fee. See, late fee, you already know 100 rupees per day, maximum 5,000 for other than annual return. And for annual return, 100 rupees per day or 0.25% of turnover, whichever is lower. This you already know. Now, this 100 rupees, there are lot of concessions for GSTR 1, 3B, 4 and 7, that is TDS. Now 1, 3B, 4 and 7, government ICI has now included everything in your syllabus. See this carefully. If there is nil tax payable or nil outward supply, late fee 10 rupees or 250, whichever is lower. You have to double it because all these are CGST late fee. Aggregate turnover does not exceed 1.5 crore. 25 rupees or 1000. More than 1.5 crore up to 5 crore. 25 rupees 2500. More than 5 crore. 25 rupees 5000. See, this 5000 is already there. All the 100 ones are reduced to 25. This was not there in ICI module till November 23. Now in May 24 module it's included. So you need to remember this very well. Late fee. And remember, this is only for 1 and 3B. First 2 points, that is A and B, are applicable for 4 as well. Sir, what about NRTP? NRTP does not get. NRTP this 100 rupees per day or 5000. Then sir, what about TCS? TCS also this. Then what about final return? Final or return also this. Annual return? Annual return, which was there even last time for November 23. Same thing. I've just kept it here. It's not an amendment. Plus TDS return, as TDS return is new for you, 25 rupees per day or 1000, whichever is lower. And what is this, sir? CGST. You'll have to double it for SGST. Clear? Okay. Coming to the last discussion. Online gaming industry. Now, people, see this carefully. How does money gaming work? Money gaming and online gaming is different. Online gaming may or may not involve money. But online money gaming has to include money. So we are talking about online money gaming, where government wanted to tap that. See how it works. Someone who has played in Dream 11 made a team based on data analysis. and risk parameters. So say suppose 10 people made a team. And they paid 10 rupees each. How much has online money gaming company taken? 100 rupees. Then whoever team is best or whoever wins the game, then in that case this online rummy, dream 11 all same, then in that case maybe first prize is 50 rupees, so 10 rupees you have doubled it to 5x. I mean 10 rupees 5x revenue 50, that is the motivation, but that 50 will become 0 in future. And second prize 30, total prize given 80, commission earned by online money gaming 20 rupees. Now on this 20 rupees online money gaming people were paying GST, but government was not happy. Government said no, I need GST on entire 100. What will I do with 20 rupees and on that GST too? I want GST on entire 100 rupees. And now the problem was that this taking money is just an actionable claim. Like this is like a lottery ticket, actionable claim. And actionable claim is covered in the definition of negative list. List of negative list has actionable claim. So actionable claim, as this is covered by negative list, there is no question of GST, because negative list is neither supply of goods nor supply of service. But government wanted to tax this. Sir, but actionable claim says na, other than betting, gambling, lottery. Now dream 11 or online money, rummy, gaming, all these companies said we are not doing betting, this is a game of skill, not a game of chance. Game of skill. So it is not betting, it is not gambling, it is not lottery. Government said okay, this is online money gaming na, I will exclude online money gaming also. Now will GST apply on online money gaming now? Yes. Then they added casino also in this, in exclusion, not in negative list. And then horse racing. So that means negative list, these 3 points have been added. Whether GST will apply on these 3 points, the answer is yes. Online money gaming, casino, horse racing will now be liable to GST. Then another problem came. This online money gaming supplier said, see, I am only earning commission, I am not providing any supply in collecting money, I am not the supplier of this. Government amended the definition of supplier, saying that any person who collects this, organizes this, is deemed to be the supplier. Then online money gaming people said actionable claim is goods. Goods date of payment is not considered as time of supply. Correct. Time of supply, you remember, date of payment is not considered for time of supply. 66 2017 notification saying that date of payment will not be considered as time of supply for goods industry. Composition is excluded. Composition, date of payment is considered, but others, goods, forward charge, date of payment is not considered. So what about online money gaming, etc.? Government amended that also, saying that all these specified actionable claims, date of payment will be considered for determining time of supply. Important. So do you have to pay tax on 100? Yes. Will it be applicable when you receive the payment? Yes. Are you the supplier? Yes. Is it covered by negative list? No. These 4 things you write and keep. Play it again, and you write and keep. Okay. Then these online money gaming suppliers said we will shift outside India. We will not be in India only. Government brought it in compulsory registration, saying that online money gaming person from outside India to India has to compulsorily register under section 24. But then they said, as it is goods goods imported from India, goods imported to India, what is applicable? Goods imported to India, custom duty, and custom duty has an inbuilt IGST. So custom duty provision should apply. GST laws should not have any power. Government changed section 5.1. See, you remember 9.1, 9.2, 9.3, 9.4, 9.5 charging section CGST. Same way there is IGST 5.1, 5.2, 5.3, 5.4, 5.5. 5.1 says on goods imported, custom duty will apply. Now they have said other than those specified by government, and in that government has specified that online money gaming IGST will be applicable. Clear with this? Yes? Okay. Now valuation of this is not there in your syllabus because valuation comes from valuation rules that has not been kept at inter CA. Valuation you learn at final as to how taxation works on this, but are you clear with the base? Yes? And sir, this 100 rupees will be treated inclusive of GST or exclusive? Normally inclusive, because the person will pay this much, so we will treat it as inclusive and discharge the GST. You can just mention that also. Let's have a look. Online gaming industry, negative list and corresponding definitions. The term lottery betting gambling in negative list is replaced by specified actionable claims. It means that these specified actionable claims will now be subject to GST. Specified actionable claims 6: betting, gambling, lottery, online money gaming, horse racing, casino. Totally 6. Now what is online gaming and what is online money gaming? Online gaming, offering a game on internet, includes online money gaming. But we are not taxing all online gamings. We are only taxing online money gaming, where online money gaming means online gaming in which players pay or deposit money or money's worth, including virtual digital asset. It could be Bitcoin also, in the expectation of winning money or money's worth, including virtual digital asset, in any event including game, scheme, competition or any other activity or process, whether or not the outcome of performance is based on skill, chance or both, doesn't matter, and whether the same is permissible or otherwise under any other law for the time being in force. So it does not matter whether it is permissible in India or not permissible in India. GST we will take even if it is not permissible in India. Virtual digital asset will have the same meaning as Income Tax Act. Supplier, provided that a person, there is an additional proviso, additional point added in supplier. A person who organizes or arranges, directly or indirectly, supply of specified actionable claim, including a person who owns, operates, manages digital or electronic platform for such supply, shall be deemed to be the supplier for such actionable claim. Whether such actionable claim is supplied by him, through him, whether consideration is money, money's worth, virtual digital asset, for supply of such actionable claim is paid or conveyed to him, through him, placed at its disposal, and all the provisions of this act will apply to such supplier as if he is the supplier liable to pay tax. Government has kept it as wide as possible. By, through, if you are collecting money, you become the supplier liable to pay tax. Okay. Time of supply, notification number 66 2017 amended. Let's see. Notification number 66 2017 provides for a relief that date of receipt of payment is not considered as time of supply for goods industry. However, this relief is not available to composition taxpayer. That means composition taxpayer, date of payment is considered. DOP considered. Now an amendment has been made to remove the relief for specified actionable claims. Hence, DOP will be considered for specified actionable claims. Okay. Then section 5 of IGST Act, levy of IGST, they have added one proviso, provided that integrated tax on goods other than goods as may be notified by government imported into India shall be levied and collected as per Customs Act. See, other than goods. In this other than goods, they have included online money gaming. That means online money gaming will be considered not under customs law but under IGST law. So, proviso 251 says that any goods imported into India, we will do the customs calculation as per customs provision. Now they have said other than goods as may be notified by government, and the other than goods they have notified online money gaming. So for online money gaming, who has to pay tax? For online money gaming, IGST will be applicable. Okay. Compulsory registration. Every person supplying online money gaming service from a place outside India to a person in India has to register mandatorily under GST. Clear with this? Okay. Wishing you all the best for your examination. Do well.